All right. Hello, everybody. Welcome back to another episode of Tech Bros. We are live on this Monday evening. I'm here with Tanner and Roy. How are you guys doing?
Great. How are you guys?
I'm immediately being blamed in chat. I was perfectly on time. But
bro, they're calling me Amit Powell. This is ridiculous.
At least it's not Amit S&P 500.
Yeah, exactly. All right, we got a lot to talk about, a lot to get into, bunch of stuff that went on in the world of Robinhood over the weekend, so we'll talk about that. We will get into some of this OpenAI Broadcom stuff, which kind of, I think it took a lot of us for a surprise, 10 gigawatt deal, so we'll get into that. And then any other headlines that we've got going on. But we do have a special guest. This person is a Hood OG, was buying it at $8 a share. They've since probably quintupled their position since they initially got in. And they've been using one part of Hood's product immensely. And I think that's going to be a big topic today that we'll discuss. So, ladies and gentlemen, introducing Jason.
Testing. Does it work?
Yep, you're good.
I have no echo. I was worried about that. I've not used this place for a stream yet. So
looks good.
We are here.
Dude, I like the background. Very holiday.
I actually have the game on. I don't know if you guys are watching or if you have any live bets.
No, but you made a good call there. If I saw that, I only dabble in that side, I might have taken,
these guys, Asian Steve. Too funny. Listen, you guys, the chat doesn't know, but I've been badgering Amit since Tech Bros, before Tech Bros was Tech Bros, and I was like, dude, how do you get on this show? This is like a 2025 mission all year just to say hello. I made it.
I think you just had to ask.
He asked last week while we were live. I was like, bro, just come on next week. All right, so we got a lot to talk about, a lot to get into. Everyone on my channel knows Jason. He does Technical Tuesday with me. If you're on Tanner and Roy's channel, you probably heard of Jason on X. I'll put his X and YouTube in the chat in a second.
I need to push this to our servers too.
Yeah, push it to your servers. There are a couple of topics we'll touch on when it comes to Robinhood, and then we'll get into all the tech stuff. And because Jason follows the Robinhood story, I think he'll be able to provide some good input on it. Before we get into prediction markets, which is a big thing, let's talk about what happened on Friday. 3% drawdown on the S&P 500, $19.5 billion of crypto liquidations. How it relates to Robinhood is outside of the stock going from 150 to 130. It's back up to 140. I don't think that's that big of a deal. A lot of people were not able to buy or sell crypto during that time. So I'll give it to you, Tanner. What was your perception, or at least perspective, on the perception that Robinhood is manipulating the little guy and not allowing them to get their orders into the market?
No, specifically on that, I didn't have any take. That's not what they're doing. They want retail to win. They want retail to win more than institutions. That's what allows them to become the biggest financial brokerage. So any tools that they can give and be faster than their competitors is a higher likelihood that they are going to be, a large trusted brand. So whatever had happened, which I haven't looked into since, to be honest, was not a good look, and that wasn't on purpose. Not that I would believe, at least. So, yeah. Do you want any? Are we going to go back around and actually talk about what actually happened on Friday, aside from Robinhood, like the actual events that unfolded?
Yeah. We'll talk about it from a sort of market macro perspective.
Okay, then I'll pass on to Roy, and we'll get back to that then.
Yeah, it's twice in a week, different issues each time. One just specific to crypto. The other was on Monday. Of course, other brokerages, both on the trading side, the equity side, and also on the crypto side, were impacted. It wasn't just a Robinhood issue. So Monday could have been an API or a data feed issue, and likewise could be that with one of these parties. But the other issue, of course, is the gas fee spiked immensely during those type of events too. So probably there's some work to be done on Robinhood's side just to, of course, make sure that there's redundancy and resiliency so they don't keep going down. It's not a good thing no matter how you slice it. But also that if it was up, those gas fees would have been ridiculous to the point where it would have just eaten up entire trades. And So they need a vehicle mechanism. They probably roll that out very quickly, just giving a warning of like, hey, these are very elevated gas fees. Double check that you're good with this before you send it on or something like that. So, but yeah, overall, not great. Robinhood is getting most of the attention just because it's market share, it's space share on X as well, and we're in a little bit of an X echo chamber, but also because of the some of the GameStop debacle from a long time ago, which is still a little bit of an overhang, but it doesn't break the thesis at all.
Jason, do you have a take on some of the hate that Hood got over the weekend, or did you see any of it on X?
On the weekend? No, I missed it. Thankfully.
Okay. So, so I'll just give
prediction markets were working fine.
Yeah, prediction markets were working fine. I'll give my take on this. I mean, look, I agree with Josh's argument here. I thought was really good. He said, look, for crypto, people may have somewhat of a gripe, but you must realize it's about liquidity. Hood and other platforms who offer crypto are having to deal with this in real time in crazy events like this, aka $20 billion of a liquidation event. There isn't just enough to fill orders. And he compared it to blaming Apple for your iPhone delivery being late because the UPS truck broke down. That is not to excuse Hood from obviously not being the most reliable exchange at that time. But I do agree it wasn't just Hood. I mean, there was a lot of other platforms that people said were having issues. And we have not had a $20 billion crypto liquidation event ever. I mean, COVID was about $3 billion. So this was much higher than COVID and FTX combined. And I think at that moment, and it was only about a 30-minute span. Yeah, Robinhood was having liquidity issues. Now, obviously, as Robinhood shareholders, we want them to never have those problems. But for the people saying short the stock, sell the stock, this is the worst thing ever, there's a conspiracy to screw the little guy. To Tanner's point, they don't get anything from screwing the little guy. Like, they make all their money from helping the little guy. So and there is no way in hell, just based on, I think, our analysis of Vlad as a founder, does he want to actively cause issues for people to fulfill their orders because he wants the stock to go up. What helps the stock go up? People trust your platform and they keep using it. So I think those conspiracies are just a sign of people that don't have a lot of intelligence, quite frankly. But is it a good look for Hood? No. Is that a reason to sell the stock? No. So at the end of the day, it's not the best look, but it's also not a reason why it's a thesis breaker by any sense of the imagination.
Yeah.
Cool. All right, so let's talk about the big topic here, prediction markets. Jason, I'm just going to give you the floor. Why do you love this product so much? Why are you obsessed with using this thing so much?
I mean, well, when it first came out, it was like, okay, so I run a community, an active trading community with an active sports betting component inside the community, and we know, and I'm an active trader, but I know like how big just this NFL season, like seasonally, how big the NFL contracts can be in terms of a revenue driver. And when I was looking, I was texting you, Amit. I was like, wait a second. Has Vlad really not put out like a single penny of revenue yet? Like, do people at the time, I think Hood was like $100 or maybe like 115, something like that. Not even that long ago. Maybe around 120. Anyways, I was like, how is this not the biggest layup in the market at the moment? Because there was nothing really baked into the price. And when I ran the numbers, it was like, okay, first of all, being in a unique position as someone that does run the sports betting community, it's like where I can see, and I think Roy's seen this too, like even today, Robinhood is such a small fraction of what they could possibly get. And then watching how fast Hood was ramping in the product acceptance. So because of where I sit, I also know that the overlap between active traders, which Vlad has said for many years, like I want to own the active trading space. The overlap between active traders and sports bettors, active sports bettors, is like 60-70%, believe it or not. And so it made sense from a strategic business perspective. And I was like, holy crap, these businesses, the overlap between these customer segments is massive. I'd say about, if you run the number, I think it's between 60 and 70% of active sports bettors are actually actively involved in trading markets and crypto. So just by bringing this one piece in, the overlap to all the other businesses, just on that alone was just, hello, it makes perfect sense. Not to mention, if they did happen to get just a little piece of that giant pie, which is giant, like that could actually become a really big business. And sure enough, you know, with the help of the community and Juan and whoever's who's tracking, right, he tags us all, and like we see these contracts going up. It's become a massive business that was, I think, just kind of discounted by major analysts at the time, like not really knowing how big the business can really be. And at the same time, I'm looking at it as like, this is not even, I don't look at it as Robinhood going out to try and disrupt a sports betting industry, quite frankly. I mean, we know that Robinhood's going out to disrupt the financial system as a whole, and they kind of just ran into a contract vehicle, a vehicle to possibly do this that has this massive overlap, an easy play from a business perspective to bring in net new consumers, a brand new line of business that is not in anybody's bingo card in terms of what's going to get them to, you know, $1 trillion or whatever. And it's just a bolt on, boom. Can this be a real annual revenue driver that is just, it's kind of like what's the opposite of a black swan? It's like
White swan.
A white swan. It's like a white swan, like, oh, okay, bright shine. And now here we are. And we're seeing the massive amount of adoption. To this day, I still don't think that they're never going to be like a DraftKings. And I can look across the market and say, okay, well, the DraftKings sell-off is probably a little overdone because it's not like Robinhood's going after them per se, but with the amount of reach and other things that they can do, and you look at Vlad's tweets and things like that, he still wants to broaden the horizon of what event contracts can be. But just this alone, when you run the numbers out and you just look at just the NFL season alone, just this one football sport in America, not even just America, it's a multi-trillion-dollar season. And that season is September to February, which, by the way, Hood as a fintech is can be a very seasonal company that pulls that seasonality kind of out of the box for them.
Yeah.
And when DraftKings came public, you can look at this. Initially, the ramp is so heavy in September to January that takes away a lot of that seasonality within the stock itself, because just that one component of the business, I mean, it could be a massive, you know, brand new line of business that was not on anybody's radar. That's just going to go straight to the bottom line, because we are literally talking about, I don't know, 90% margins. Not nothing, but definitely 90% margins. So I'm going on a tangent, but when you look at the NFL ramp from now to the quarterfinals, to the to the championships, to the Super Bowl, we have barely started. And if you're actually counting the contracts, we are week 6. 16 weeks of regular, it just gets bigger from here. It just gets bigger from here, and it gets massively bigger from here, because by the time we get to the quarterfinals, it's giant. And by the end of this year, yeah, I would put the numbers at like $250 million just on the Super Bowl ramp, and then you include the other, like college football, MLB, NHL, and everything else that they're trying to do. I'm like, okay, this was not in any metric. It's a big deal. Yeah, and it's just to the bottom line.
What did you mean by it helps with seasonality? Wouldn't that make Robinhood more of a seasonal business?
No, because it's not their core business, and I don't think it's ever going to be their core business. So it would kind of offset their core business. So in terms of trading, like the market itself is typically seasonal. So the market itself, I think Robinhood needs net inflows, generally speaking. And usually, seasonally, September is like a bloody month, usually, annually. I think we could all kind of agree to that. And that's the seasonality that I'm talking about, possibly offsetting, because in the month of September, Robinhood from here on in perpetuity will have a brand new line of business that none of these other financial companies have. That's just going to boom offset to the bottom line, that you'll always have to think about as that's going to be an extra buffer, an extra cushion forever, as long as they're in this business. That'll kind of start, you know, hopefully hold them afloat.
Yeah, I think more than cyclicality, I can see some of that too. But I think, or rather than seasonality, I think it's cyclicality that it really helps them with, because if markets are going down and it's, you know, if it's a recessionary period, I don't love this, but people still tend to bet, although they still may bet less as well. And so I think it eases some of that cyclicality. There is some seasonal aspect too, but yeah, it's and the other piece too, Jason. I love the way that you captured this too, and I'm not as far as you are as far as seeing this. It's a big revenue driver, massive. I'm probably not quite as bullish as you're on that, and then we need to get Tanner and Amit closer to where I'm at today, hopefully, but. It's exciting that this didn't exist a year ago, and it's just showcasing what Robinhood is able to put out at scale. That they're able to take something that didn't exist at all, expand their TAM, and then capture that TAM in a very short amount of time. And this is like one of their most successful ventures in that.
So that gets into the analysis that Roy, you posted about today. Robinhood's head of futures said, we as a firm are going to be looking to see if there is an acquisition that's available, specifically an acquisition for prediction markets. So this is an official quote. They told Reuters, hey, we are in the market to buy more of these platforms. Roy, you did some analysis right here on this post on what could be the best platform. Any thoughts on who Robinhood should go after?
Yeah, I mean, like if price wasn't a factor at all, it'd be Kalshi, almost certainly, except for possibly regulation. Kalshi just launched internationally. Kalshi backends most of what they do on the predictions market side as well. And they seem like a good cultural fit. They're growing incredibly rapidly to the point where I kind of wish they flipped those two colors, because Kalshi's more like needs the Robinhood color there. But regardless, they've overtaken Polymarket in volume. Of course, most of it is on the sports side. Polymarket is more international. It's not in the United States at all, but they have a massive leadership edge where it comes to non-sports related markets. And so if you look at that next chart, it kind of shows what Polymarket does out of sports. So probably one of these two. The problem is Polymarket actually has even larger valuation. So I think Kalshi makes more sense. Plus, there's a little bit more regulator scrutiny towards Polymarket, although they are more established internationally. They don't already back in and have this partnership too. But regardless, like they don't have that much cash in the balance sheet. They can dip into the debt market, or they can issue shares to pull this off. It would be a little atypical because most of the acquisitions that Robinhood does are significantly smaller than they are. Now, this still would be significantly smaller in terms of market cap. So, there's not really an issue there. It's a larger, and maybe it's a time to do that, but it's a larger focus. There's a ton of startups out there too. I talked about two of them in particular, and then there's kind of one that's in between that's focused on more shorter dated prediction market plays. There will be more and more entrants as well. But yeah, I would say Kalshi or probably a very small startup would make the most sense for them to acquire.
Yeah, Kalshi's pretty comparatively to the acquisitions that they have done, it's expensive. But compared to the size that, Robinhood is now, they can acquire them. Like it would fit nicely in. But yeah, curious if that's the name that they're going to be
acquired though.
Maybe not. But also, like a star team like Vlad, maybe you do want that customer base to be with. Get your stock in Hood stock.
It is weird though, right? Because Robinhood, Piper Sandler said Robinhood might be 25 to 35% of Kalshi's volumes every day.
Yeah, I think that was the stat. I don't know if even if they bought Kalshi though, I don't know that that's such a good thing. I mean, the way that they have it right now is just it's a beautiful setup. There's not really any cost to them, and they're not taking.
They would get double the revenues because they wouldn't have to split the cent.
They would get double the revenue, but they would also assume a lot of risk, which
yeah, that's true.
Is Robinhood really trying to take over spread betting and things like that? I don't know. Like being a sports book themselves, if it's easy, it makes sense. But
well, clearly they do want to. I mean, if they're looking at acquisitions, they do want that risk.
Here's the question, Tanner. Why do you think they gave this quote so explicitly that we're looking to acquire? I mean, I feel like there's some logic behind them saying this. It's almost like they want to go after DraftKings entirely.
Yeah, I'm not sure about why. I think that they just haven't. Hood's not been a closed book too often, or Vlad. I mean, they're okay with saying what their plans are and then going after it and still beating their competition there. So, I think that's just their confidence. But prediction markets, and you can see it in Vlad's tweets, this is going to be a big part of the company. They are constantly talking about prediction markets. Whether it's gambling or what have you, but I find the sports betting stuff really quickly. I wanted to point you guys over to Polymarket's platform here. If Vlad ever puts out something like this, I'm telling you guys, I would use this constantly. Polymarket earnings calendar, and they have, projected EPS. So JP Morgan's going to get $4.72 of GAAP EPS. There's a 92% chance that they beat on earnings.
That's awesome.
The problem is, can Robinhood give people the ability to bet on companies given how regulated they are?
I don't see why not.
I don't know that you can bet on Fed results and economic results.
Yeah, I saw this, Tanner, too, and I was like, okay, so if Robinhood goes here, this is a big deal. And maybe maybe they put that post out because that's not where Kalshi necessarily wants to go, or I would assume that that's not necessarily where Kalshi wants to go, but it probably is where Vlad would want to go longer term. I
don't know what the odds would be to put what's the chances that Hood beats earnings or SoFi beats earnings, but I would love to bet on that because to me it's not a 50-50 roll of the dice. I feel like I would have an information advantage.
Yeah, the hard thing right now is if you're going to predict that just using stocks or options, you have to be right twice. You have to be right on them actually beating and also on the stock going the direction or missing, and right on the stock direction as well. That's a harder setup than just, okay, EPS, I know this company well. Yeah, they're going to blow that out of the water, which happens a lot more than you guys think.
Which is
it's actually really interesting to look at that because the whole wisdom of the crowd phenomenon. Of course, when you have larger volume, it's a little bit different setup because other people can see what other people are predicting and see what the spread is there. But that can actually be very valuable as somebody that's looking into a stock. You're like, okay, I've got a lot of shares, and why is 92% prediction saying that they're going to miss on EPS? Okay, there's something I might be missing. I need to look into this.
Right.
Yeah, and the EPS seems to get locked in when whatever the average was whenever they created the prediction. So that can change a lot. For example, JP Morgan's, whenever they opened up the prediction, was $4.72. I think if you check now, Wall Street's at $4.92. So even the prediction from Wall Street's 20 cents higher than what the prediction market is at. So if you had conviction early, I'm sure the prediction has already increased a lot just going into earnings. But for a company like SoFi that's beaten earnings every single time,
yeah,
if you put a 90% chance and I can make 10% on that day, cash out, I mean, I'm probably not going to see that type of rate on SoFi stock in general.
That was honestly the ticker that I was thinking of. I'm like, he's thinking SoFi right now. I can tell the wheels are spinning in your brain because they do always beat. So
yeah,
but there are some companies like that too that consistently do that are underappreciated by the market over long stretches of time. Which case in point, even outside of this specific product in the predictions market, there are different markets out there than what I'm in. There where people can have Jason. A real edge. Jason, you made a great call on one of the two Monday Night Football games. I don't know how that's played out since I looked there recently, but it's
playing right now.
Yeah,
we're winning.
All right. Well, there's people that know that area on the back of their hands, and they're like, oh yeah, historically they go into this and they don't play well in snow-like conditions, all these different things, and they're like, hey, the market's got this wrong. Let me predict on that. And same as with stocks. So it's interesting.
What was funny is imagine what happened whenever that Upstart report came out and all those lenders ended up falling. What happens during those times to the prediction market side? Massive crashes in people's expectations of beating earnings. And then it all turned out to be fake.
Yeah.
That's why I like the live prediction markets. It would be a lot of fun.
So we all agree prediction markets is a really big catalyst for growth.
Biased panel. Yeah.
Mm-hmm.
Yeah, that was not that. And I think that's part of what made the stock go up recently too, right? Because how do you value this, and what kind of multiple does that add to the stock? And then where does that put them moving forward? And I think that's part of what maybe drove the market recently ahead of earnings is there a lot of people just kind of fumbling over the situation, trying to figure out, well, what does that mean for Robinhood, the equity, and where should that where should that land the stock price today?
Okay. So I guess we're going to see how the prediction markets ultimately ramp up. By the way, we have earnings on November 5th, folks. So we'll be live on November 5th after hours. And I think Street's expecting now almost 1.2 billion. So it's going to be one of their best quarters ever. And if they can beat that, that would definitely help.
We're winning.
You're winning.
We are winning. We're
Go.
winning on all the spreads.
So Hood was 153 on Friday, fell all the way to 130. Now it's back to 140. I guess some general thoughts about the sell-off. Tanner, how did you navigate a 3% down day for the first time in 6 months?
Held. I bought some stock, not Hood or anything. I ended up buying a lot of BMNR on Friday and then Friday in the after hours. Ethereum and crypto just saw such an over-exaggerated pullback that I think taking advantage of that was, the best thing to do if possible. And I had a really good hunch that was going to be a taco event. We've seen him do this 10 times, 15 times, these unbelievably exaggerated, like threats of large tariffs to China or other countries. And usually the market is okay a week from now, so it happened quicker than I thought that things ended up repairing. We didn't even need a meeting, but yeah, everything went back to normal. And Donald Trump, once again, he can, in one hand, say, extremely disrespectful. How could Xi do this? Like, the guy's a little worm. And then the next day, Xi goes, oh, yeah, sorry, my opinion. He goes, I've got the most respect for Xi, love Xi, great leader. So I had a feeling this was going to go turn around and everything was going to be fine. And hopefully people didn't freak out and dump their positions. Unless, of course, Binance or something else dumped your position for you, and in which I'm sorry, but yeah.
Jason, your take, and did you buy anything in this?
I was actually, I thought it was going to come. We were talking about it maybe like a week before that, and so I was prepared for it to happen when we got that first 3,700 dip on Ethereum. This last one, I didn't have my orders resting, and I'm very old school crypto, like very old school crypto. So like really the only times I think about buying is during these kind of flash crashes. Literally, this is it. But to me, it's like I need to have my orders out there already beforehand resting, because these things happen so fast. It's not like regular markets. There's no circuit breakers that are going to save you. And they're so fast that they're basically just liquidity events of people getting liquidated on their futures now. That if you don't have something there waiting at the ready to pick up at a very steep discount in the middle of the night, you're probably not going to get filled because you will try to chase it. And I think if that was the comment about Robinhood, that is if that's what it was, that's just normal. So that's dumb. For that to be a comment. That's how crypto works. That's how it's always worked since the very beginning. Crypto is the rawest form of supply and demand that you can find. And so from that perspective, yeah, you have to play it differently. Did you guys get it? Like, did you have any resting orders? Because I saw someone, I was a little butthurt, man. I'm not gonna lie. I threw it out there. I was like, I missed it. I'm bummed. But the only thing I bought was BMNR and an SMCI, and I just did my daily DCA of Hood. But that's basically it. Like BMNR hit our levels that we've been watching, like that 43-ish. I think BMNR, I should have waited after hours, because that was a really good pickup if you waited till after the market was closed. And that's interestingly how crypto works too. So maybe moving forward, I'll just wait till after the market closes and get it after hours, because that was a really good pickup. I mean, a couple extra bucks, but I think it was like 30, like not 30. It was.
No, I think the lowest it got to was 47. I think
47. Yeah, it was deep. I almost at 37. So 47. It was down pretty heavy, but that was the discount to me. I bought a little China exposure not gonna lie, actually. So I did that too. Hopped in for the JD run into singles day for 11-11.
And,
We'll
and
see how
how
that goes.
how did that work out? I didn't even keep an eye on Chinese stocks throughout this last period.
So for you, it sounds like it was a pretty easy dip buy. For active traders, it wasn't that easy. It was a very scary kind of dip buy. And if a lot of people intraday Friday, Freaky Friday, it like they might have tried to jump in early around the lunch hour or something, which is normally you would think that normally by the end of the day things start to turn around. But on a Friday, especially in a bull market, what's weird about Fridays in bull markets is that they tend to have a lot of profit taking, and there's a lot of people that might not be there. So low liquidity environment, Friday in a bull market, you have profit taking going on. Things can get out of control. And we were so used to seeing that the dip buyers show up late day. There was no dip buyers in sights, like not until like not even to the bell. There were no dip buyers in sight. So they must have shown up after hours. So intraday, it might have been a little scary. I did anyways, but I absolutely waited till the bell hit. Because I needed to it was either wait till the bell or I see some signs of life. But the dip buyers were nowhere to be found intraday on Friday, oddly enough. And then of course we get the "Don't worry about China. She just had a bad moment" tweet, and here we are, which oddly sets us up better for earnings, anyways. So I'm actually kind of happy about that.
Roy, what did you do on this 3% down day? You're muted.
Always muted this guy.
Yeah. I ended up rebuying my covered calls, which was on Robinhood, which had ran. I had some that were fine that were not going to get hit. I had some, I think, at 142 and some at 140. And I saw this as an opportunity. I didn't do what I did before on names, waiting for it to go all the way under. I'm like, hey, I'll take the lump for that lot and be happy to get out of that exposure. I bought more BMNR. I bought more Ethereum, although there were problems with that. But I waited over the weekend, so I did get the best fill on that versus the massive dip. And because it's Columbus Day, some things didn't settle, which is not unexpected. So that'll show up tomorrow. So I'll probably add a little bit of PayPal here too.
So it seems like all of us bought the dip.
I think Roy just put a little. Do we drink on this show, by the way? Amit told me to bring beers, but I don't know.
Yeah, we drink. We all drink. I had mine before the show. Your turn.
Water, tea.
We don't drink on the show, but you are welcome to drink.
But I think you brought up a good point, Roy, that maybe people aren't thinking about. But today was a bank holiday, technically. And there was a lot of funds that didn't clear. So anybody that sold Friday didn't have their funds freed necessarily today to buy the dip. So tomorrow can get even more interesting, believe it or not. So I'm very interested to see that.
Dude, is Steve in the chat? Because he probably has some.
Where
milk.
is he?
He's probably drinking some milk. Steve, if you're drinking some milk,
I saw him lurking earlier.
put a milk emoji in the chat. This man is starting every video with an ice cold glass of milk.
I love
It's
it.
beyond funny. He'll start a live stream and go, "Ladies and gentlemen, I'm starting out with strawberry yogurt today."
There he is. Milk for life.
He talks about his flavor of the day.
Steve and I are gonna do a cookie review stream. We're gonna buy a bunch of cookies and review them live, dude. We're gonna have to do it.
Do you guys does he like White Russians? That was the milky kind
Dude,
of.
he likes so many types of cookies. He's a cookie guy. I'm a
That's
cookie
great.
guy too, but I don't eat it as often.
No,
Do you know what a White Russian is?
yeah,
It's a cookie, right?
that's all.
Did it really?
I knew he didn't know.
I thought it was a white macadamia chip cookie or something.
White Russian, man.
Oh, it's a
Drink.
cocktail.
Yeah.
Oh,
Not a mocktail, but a
Now-
cocktail.
What we need in time of that stream is really prediction market on what is going to be the best cookie as you guys review it. So,
bro, everyone in the chat's gonna tell me they knew what a White Russian is.
Yes, everyone in the chat will. Everyone.
Yeah, man.
I don't even
Even
drink.
the miners, dude. Like
Yeah,
that's
it was a freaking cookie, dude.
it's a tasty little beverage.
Thought it was a cookie, bro. We were talking about cookies. Why are you bringing up alcohol?
Oh man, that might be worse.
He was
than,
bringing up a
all the-
milky alcohol
If it
drink.
has milk.
Whatever, dude. I thought it was a cookie. Everyone knew it was a freaking it was a drink.
Steve, you need to go over to Amit's place and bring some White Russians. And then if he doesn't know, he needs to experience.
The only bro, I know
Actually.
I know what a Moscow mule is.
That's good.
That's like how I sound smart.
I think he will like the White Russian. I'm pretty sure Atlanta's going to win this straight up. We got 2 minute warning coming up here. 21-14.
Amit, while your hands are above and I can see them, keep your hands where I can see them. What's in a Moscow Mule?
Bro.
Hey, put your hands above. Show me your hands. Name one ingredient of a Moscow Mule.
Alcohol.
Yep.
Okay.
There you go. All right. No, you passed. You good.
I think there's some lemon. It's like lemon juice, right? That's what they put in there?
Dude,
Right? It's like, what the fuck is in a Moscow mule, bro?
you
Oh,
have
there
to
you
know
go.
that there's ginger beer
should've
in it.
been
Or
like
else
ginger
you never
Oh,
even have
I
it.
should have known that. I should have known that. All right. Anyway.
I knew the second he started going like this, he was going to Gemini
For the
immediately.
Yeah.
Google AI overviews are like the best AI product that's out there right now. Like genuinely. We use it on the market open like 50 times a day. Okay, so OpenAI, Broadcom. Jason, I'm gonna give you the first word on this 10 gigawatt deal. It looks like OpenAI is central to every single AI company, AMD, NVIDIA, Oracle. What was your reaction when you saw that deal this morning?
I actually thought the stock would be up a lot more. Believe it or not. I mean, I know it's up 10% and it's like 150, 125 billion market cap increase, but you do the math. That is a lot of dollars. I know it's a long-term thing. Oh, did you put that? Did you post how many dollars if you do the math?
It's about 300 billion.
I had like 4 or 5. Yeah. But I mean, over many years, right? I think it was like 5 years or something. But just the same, I mean, the chart, technicals first for me. So the chart was setting up anyways. It was a tough day, but I sold my short because I didn't take it long term. I just took it short term and I got shaken out. So I was a little bummed, but happy to see the trade like working out. But this makes sense to me. I think that this is going to try to go for that 400 anyways. If you get a little bit of pullback, I think it bases out. I think this carries on. We'll see once it gets up to that more recent high that it just hit on earnings, but I think that it makes sense out of the gate. And I think that it makes sense that it held through the whole day. It kind of gapped up and just went sideways. So maybe it breathes a little bit, but I don't expect to see a giant pullback. I think it's a bigger deal than the market initially understood. Actually, I still think it might be a bigger deal than the market really thinks it is. So we'll hear what they have to say on earnings, but yeah, that deal was massive. When you really look under the covers of what it could potentially be, there's a lot of theoretical, like, oh, well, that's so massive that do we even have power? All those kind of conversations probably can get brought into the mix, but just on the surface, I would just look at it and say, I think it could move the stock higher still, to be fair.
Tanner, we'll go to you next. I mean, I think the real interesting about this thing is Oracle's entire stock price has been lifted because of OpenAI. AMD, obviously, that 35% move was because of OpenAI. NVIDIA didn't need OpenAI, but they were stuck at 170, and then they got up to 195 because of OpenAI, or at least in part of OpenAI. And now Broadcom, it wasn't a massive move, but 10% is nothing to scoff at. A, what's your thoughts on the deal? And then B, is OpenAI even allowed to fail anymore?
It'll be bad if they do, but I think they'll do well. I've been pretty adamant and consistent that I think OpenAI will be one of the biggest names, like just in all, U.S. stock history, whenever they go public, at least. They'll be $1 trillion name, and they need a lot of service from many different businesses. So for years now, we've been listening to Jensen say, you know, the demand for compute is just going to be absolutely exponential, explosive. And now you're watching a customer unveil a plan that is not happening. Like, these deals are not even, most of them don't even have time limits on them. We don't know how long they're actually going to be for, but they're setting up a very long-term plan because they know that they're going to need that compute. I think it's legitimate. I think it's real. Do I buy more NVIDIA? I don't know. Honestly, I've been looking at TSM a lot right now, just as like a general winning play. And if something happens to Taiwan, it's not like my NVIDIA gets out unscathed. I mean, we're all doomed. So, yeah, TSM looks really cheap and going to be a general winner across the board. I don't even remember your question.
Is OpenAI allowed to fail? Is sort of
yeah, I mean, of course they're allowed to fail. I don't think that they will, though. I'm a big believer, obviously, I have to be, that AI is legit and that they'll create tools that will, you know, multiply GDP.
Roy, same question to you.
Yeah, not too much to add on the first question. Beyond just, I agree with these guys. You know, just further validates that AI is real and growing and ramping. Is OpenAI allowed to fail? It should be. I'm a big free market guy. I think it's a mistake when the federal government steps in, especially with OpenAI. They're a massive player, linchpin. I still think that NVIDIA is more important to the AI ecosystem space, but all AI is not OpenAI, and vice versa. And frankly, it shouldn't be. I agree with Tanner. I don't think that they will fail. I think they'll continue to grow. Now, there's going to be ebbs and flow moments, and their valuation may not, you know, it may be expensive here. Who knows? But if they do fail, it's going to be a bad day for everybody. Even if you're not in, private equity, OpenAI, if you're not in NVIDIA or anything in AI, it's going to hit the markets in a massive, significant way. So even if you're in like investing in Coca-Cola and dividend planes, it will still be a bad day for you. So we better hope that doesn't happen.
Even whenever OpenAI came out with its original product, you know, everyone thought that there was going to be no competitors because there was no other, you know, legitimate LLM that was anything like it. And then what was the original? Bard ended up becoming Gemini. That got really great. Grok came out of nowhere, skyrocketed, became really great. So even in these next phases of artificial intelligence, there's going to be lots of competitors. And I think that the amount of focus that a company like OpenAI is getting is so interesting because I feel like you can make similar bets on names like Google or names like Amazon that are going to significantly benefit from this AI craze. And yet there's a very minimal premium being given to these names. So honestly, those are the names that I'm acquiring right now. That benefit, by the way, as cloud providers as well, as essentially custodians to OpenAI as well.
Okay, that's kind of my similar thoughts. I mean, I don't think OpenAI is allowed to fail. It's not possible anymore. They are the reason for why the hundreds of billions of dollars in market cap have increased across the board. I mean, without this OpenAI deal with AMD is probably stuck at 150, 160. Without this Oracle RPO growth on a cloud computing side, you know, they're probably stuck in the 210s, 220s. And so I do think the likelihood of them succeeding, though, I agree with you, Tanner, is greater than not. I mean, that chart that's been going viral of it took the internet 13 years to get 800 million users, and ChatGPT, it took it 2.5 years. As our milkman says right here in the chat, they're not allowed to fail. Too many companies are tied to them, which is actually kind of bullish. That means there's an incentive for all these companies to make sure it works. And so I guess the follow-up question then is, and Jason will give it to you, is do you think Grok and Gemini really have a shot at dethroning them, or has the industry decided ChatGPT is the winner?
Grok and Gemini. I think that, well, first of all, OpenAI, by the way, has the best CFO in the freaking valley. So like that is a big win. Having Sarah Fryer on the team is like, she's an unsung hero, but if you don't know who she is, she's like the genius behind Square, like initial Square team, but probably so from the valley, being from the valley, best CFO in the valley. But so she can make magic happen. And she is doing exactly what she does best right now. And that's what we're seeing. Like the financial, like magician, like this is all Sarah. This is all her magic making ability. I just putting that out there. This is Sarah's magic sauce right now. But in terms of Grok and Gemini, I feel like it's going to, each one will probably end up having like their own niche, if you will. Even today, as things are progressing, like, you know, I don't know how many LLMs you guys have, but I have a couple. I know that there are certain things I need to go to Grok for, and there are certain things that I need to go to ChatGPT for. Grok is not good at creating images, things like that. But if I have a financial question or I need to get social sentiment, I need to go to Grok. And there's not like, that's the place. Stock stuff, it's all Grok. It's not even comparable trying to do something like that on ChatGPT. So those are just some unique pieces that, as things move on, it'll become more glaringly obvious, maybe which use case, which LLM has a better piece, and depending on what you do and what your use case is, you might have a different tailored approach, or one might be better suited for you. So I don't know that it's a zero-sum game per se, but there definitely will be a handful that don't survive. I'm not sure. I don't use Anthropic at all, personally. So like there might be some that don't actually make it, or what, I don't even know what Microsoft's is right now. But I think, I think that there's, I wouldn't say a chance to your question, but I don't know that I don't think it's a winner take all scenario either.
Yeah, I think it's a commodity. Now, it's one that has a long way to scale, but we've seen how this plays out across other commodities. Like one of those, which payment service providers illustrate. There's three massive ones: Braintree, Adyen, and Stripe, and then there's a bunch of smaller, very specialized ones. And usually, the commodities will consolidate into like two or three big, massive plays, and then also a degree of specialization as well. So, Jason, you mentioned you don't use Claude. I don't either, but that's because I'm not a programmer. If you're a programmer, you're using Claude. Like the Robinhood product is very well integrated. The model context protocol, it's great and everything. And there's a bunch of models like that are like either specialized in a broad category, or they're very much focused like on a niche, like Harmonic, the Vlad Tenev's Robinhood startup. Well, not Robinhood, but Vlad Tenev's startup, CEO of Robinhood. So I think that's the way that this direction goes. That OpenAI clearly is a leader and a winner there. Gemini, I actually think is better, which it's gotten demonstrably better for me anyway since mid-September. And I also use Grok, but I think probably a triopoly between those three, and then the specialized ones below that.
I think Gemini is going to be one of, like, maybe not as big as OpenAI, but I think honestly, we'll see. I think that's the real competition. Gemini has everything.
I agree.
And what do you use Gemini for? Sorry,
just anything. I think it's more the components that is going to make Gemini more useful. For example, OpenAI doesn't have hardware. Gemini does. They have the phones, the computers, Chrome, all these things. Then if you look to how do they lower their cost to serve and actually create the tokens that, generate those responses, they have Google Cloud. Grok is requiring other services, OpenAI is requiring other services, and maybe OpenAI is trying to strike a deal with Broadcom to get them to create a new chip. What generation is the TPU on now? I mean, they are way ahead with Ironwood. So they have a very competitive chip. In fact, I think it's one of the only custom silicon products that Jensen has actually given any credit to. Like he said, TPU is going to continue to do well.
Right.
So they have such an unbelievable cost to serve. They have an enterprise moat amongst, the absolute greats. Like who has more enterprise customers than Google? Microsoft? Like that's it. And And so their distribution, their cost to serve, their data across like Google has more data than any other company in the world. So even Elon Musk has said, flat out in a flat arms race, like Google takes this every day. So I not personally do I use it that often. I dabble, but there's a lot of people that use Google.
Let me say one more piece there. Danielle Dallas at 1021 said, Gemini will be the one your grandpa accidentally uses. Distribution. Like it's such an advantage. You can't overstate that. But there are some that will not download OpenAI to go into that, but they'll just happen to accidentally use Gemini. It's an easy layup there. And
they're doing more work than OpenAI is.
Oh, yes. And then it's kind of like with payment service providers. When your business becomes a massive scale, you don't want just one primary payment service provider. You want multiple for redundancy and an orchestration model. And so most large enterprises use 2, sometimes more of these. And it's the same way with KLM solution that Palantir has and what they're doing with what Perplexity is. It depends on what the model is good at. That's what it actually uses when it pulls those up. And we're going to see that across, at least 2 or 3 big ones and a bunch of specialized ones.
Folks, we have a guest. We have a guest for the first time ever in history. The 2 Steves are live together.
First time ever?
First time ever.
I need to change I can't change my name live. Dang.
Asian Steve, of course.
And with the milk, I don't have a milk.
Of course, why not?
Not White Steve and White Steve, both in the same room. We made it.
We did.
Look at Amit just basking. He's just basking in the.
What a time to be alive.
Steve, have you ever seen technical? No, you've seen Technical Tuesday.
Yes, I have.
Yeah, so Jason. He's a
TA.
He's a TA expert, and it's really cool to have both of you on together. We got 15 minutes left, but Steve, your response to this argument about OpenAI: are they allowed to fail?
Well, I just put probably a 800-word post out about it. No, they're not. They just did 3 major deals. Think about what they just did in 3 weeks. Well, 2 weeks at this point. 10 gigawatt deal with NVIDIA, 6 gigawatt deal with AMD, and 10 gigawatt deal with Broadcom. This deal created a trifecta, and it basically allows them, or OpenAI, when I say them, to design the chips and systems and allow Broadcom to develop and deploy them. And everything that OpenAI is learning from developing the models, they can embed directly into the hardware. It's exactly what Apple did with the A-series chips for the iPhones. And they just did a strategic move because not only did they take a ton of chips off the market with NVIDIA, which is the biggest player in the game. They diversified the stream with AMD and took those chips off the market. And now they are creating and designing their own and having Broadcom create their own chips. So, no, at this point, it doesn't look like they're going to fail.
What do you mean by taking them off the market exactly?
Well, previously, OpenAI was going third party for their compute. Now they're going to be building and operating their own data centers. So all those chips that would have went to other players are going to OpenAI.
You don't think that the cloud names are going to continue to accelerate even if they're not servicing OpenAI? And by the way, I think they'll do both. But
I think that, they are going to do both. They're going to keep contract. They already said they're going to contract to third parties. And they're now going, the big difference is now it's the first time they'll be buying directly from NVIDIA and operating their own data centers. This is going to cause Q3 earnings calls to potentially be the most important earnings calls we've heard in years.
Agreed.
Because Jassy, Sundar, Nadella, and Zuckerberg have to come over the top. They don't have a choice.
If they don't, what happens?
If they don't come over the top, you will see the bears have a field day about OpenAI is spending like a drunken sailor and everybody else caught religion and realize they don't need this much compute. That's why this is the most important series of earnings calls. which I think it's going to go the opposite direction because Zuck already said he's okay losing several $100 billion instead of not spending enough. And we already heard Nadella from Microsoft say that they're going to spend over $100 billion this year. And if my memory serves me correctly, I think they spent $68 billion on CapEx in their fiscal year 25. So they're going to increase that roughly, I don't know, 45%, 42%. So this is going to be really interesting. And I think that sky is the limit at the moment. I'm not even concerned about 2026. I'm interested in 2027 earnings at this point because I think 2026 is now a full-scale build-out.
Yeah.
Long NVIDIA, baby.
Long NVIDIA.
Yes.
I'm thinking about diversifying a little bit. Well, not selling NVIDIA, but just going heavier and buying TSM. What do you think, Steve?
Love it. Absolutely love it.
I'm planning to do a deep dive on TSM. I've been looking at them a lot more as well. I don't have a position, but dude, it's hard to imagine they don't win. It's hard to imagine Broadcom doesn't win. Hard to imagine Micron doesn't play. Like, it's like one of the reasons I got into SMCI as well is because Jason was just making a simple argument, which is like, there's going to need to be more liquid cooling technologies.
Yeah, more rack systems, more liquid cooling, more RAM.
I just look at, but Steve, you gotta get me with me on this one. If we look at the charts, we look at where all these stocks are today. Help me understand why SMCI is not the stupidest value here now today at near Liberation Day levels. How is that not the easiest AI layup in the market, or is it?
No, it's a huge layup. It's barely done anything over the past.
Barely moved. And I mean, just
I'm looking at it right now.
15%
over the past year.
Look at it. There's some of my crews here for sure, but there's no way the SMCI does not report their absolute best earnings report this next month. There's zero chance. Like, sorry. So on record, no freaking possibility that it's not their absolute best earnings report. Period. End of story.
Well, how about this?
I like that you put that on record.
Yeah. The forward estimates on revenue may be light.
No, for sure. And the stock is held back by its own doing. Yeah. Given, right? Granted, there's a lot of scar tissue, but the second either they pre-announce because they can't keep their mouths shut for too long because they're going to be in trouble again. Look at Dell just doubled their forecast. Sorry, I'm a little hyped up
on the top and bottom line.
Yeah, this is egregious. This price of I'm sorry, it's just dumb. Like it's not. It doesn't make sense when I look at it, and I get that. Okay, I get why it's down there because it's burnt a lot of people. It's done a lot of damage to a lot of like psyches out there. But
that is also where the opportunity is, right?
That's exactly right. But I'm not saying that you have to go back on the whole SMCI gravy train or drink the Kool-Aid, but sure, I'm serving the Kool-Aid today. But I think that it makes sense. Like the numbers are going to come out, and there's, even if you don't believe their numbers, and the margins are going to be crap because the margins are crap. And no, there's no moat for the company because it's a commodity. But so is Micron. Look at Micron. It's a straight up commodity. But
commodity isn't a bad word either. So
but if we look across the board, okay, Dell, SMCI has just as much to gain as Dell. And I'm looking at the stock price and I'm like, what is wrong right now? Like I know what's wrong, but like this is. Anyways, sorry. Let me get off my soapbox.
For me, I think TSM. Like if you're going to bet between the two, TSM makes more sense. I'm not an either, but I've been thinking of TSM ever since we did our paper stock draft because I'm like, hey, this is. I know it's international. There is some China risk. I think there's a lot less as long as things get worked out between the U.S. and China. If they get cut off for whatever reason and it starts impacting them both on the processor side and also energy side, then we might have. The potential for a Pearl Harbor situation as it relates to Taiwan, which is bad for everybody, including TSM, especially TSM. But P is basically the same between SMCI and TSM, and you don't have the leadership questions. You don't have the accounting issues. There's a risk on either, and I would much rather do TSM. It's hard to see them not do well. Same with FCY. It should be, but the weird accounting stuff, not for the first time. Some leadership questions. It's harder for
Jensen
me to
stop saying their name completely.
Well,
Honor
that's
not even.
so you
not
guys
a
are
small
right.
thing. Yeah,
You guys
that's a
are
great-
right. Like that right there is exactly why the stock is where it is. The whole time that it was going up, I was not on the SMCI bandwagon to that extent. Like, and it was just like, I don't, they're not that great of friends, but I can look at this and maybe you guys can run the numbers and figure out where this lands. But to me, I look at it and I'm like, okay, this is like $80, maybe more. But
it might be. It maybe. Sorry, go ahead, Jason.
Yeah. Oh no, I'm just but where we are even after today's 5% or whatever, 55. Liberation Day was 50. It's 55. And I'm like, okay, But anyways.
Yeah, the broader point is it just feels like if NVIDIA is not going to stop and AI is not stopping with CapEx, then there's a lot of these players that could run. And I think let's end off on this question right here, because I think this is a topic I think a lot of people are thinking about. How are you guys managing FOMO in this market? So you got Oklo that's up 18% today. You've got.
Okay, bro.
Go ahead. Go ahead.
I don't.
So you have zero FOMO over quantum or nuclear.
I'm not in quantum. What do I care about quantum? The whole sector could burn. Doesn't matter. It doesn't impact the S&P. None of those companies are in the S&P.
Yeah. Steve only feels FOMO if someone told him, like Robinhood, for example, we've been telling him to buy, and then he doesn't. That's when he feels FOMO.
See, I actually don't think.
But Steve doesn't have any what are you in right now, Steve?
He doesn't like Robinhood, bro. He never got in it.
No, but for this year he does not. But what he's saying is that he's not. What I hear him saying, I'm not going to put words in his mouth. What I hear him saying is that he's not putting himself in the position to be at risk for that. And even when I look at SMCI, I think that to me, to answer your question, SMCI is my answer to your question. It is not gone nuclear, like the nuclear stocks.
This guy's buying BM&R. He won't buy Robinhood back when it was,
but,
$20.
But he's also buying
Look,
at $4,000, right? It was at
that
12
doesn't mean
something the other day. So give him a break.
Well, no,
Steve's. You guys are both pretty. You can talk at the same time.
You may not realize it, Jason, but not only did he not buy Robinhood, I literally bought him Robinhood, which at $13 a share, it's just $100 worth. It's one of our end of the year gift type of things, and he sold it. He could have just
wait. What price did you sell it at?
I don't know.
Goodness.
Low.
Yeah.
But no, in all seriousness, Steve, why aren't you feeling any FOMO for some of these stocks that are exploding every day?
Because one, quantum doesn't deserve to explode. Most of those companies are fugazis. You can't convince me that Alphabet is not going to figure out quantum before those companies. You can't convince me that these companies are going to have some major breakthrough, that Alphabet, that's taking a blank check approach to anything they want to do and has been working on quantum for God knows how long. I would love for somebody to come on and explain to me why these companies are going to do something that Alphabet can't, that Alphabet absolutely wants to do because of their own chips that they want to have. So can't convince me on that. Nuclear, we don't even know when SMR is going to come out or if this is even feasible technology that's going to be stable.
But to push back real quick, let's say there's so much demand for energy that we have no choice but for nuclear to succeed. Isn't that a reason to kind of...
Nuclear should succeed, but companies like Southern Company and NextEra should be catching a bid. Southern Company is operating 7 nuclear reactors. Same with Duke Energy. Like, nuclear is already a thing.
So why is Oklo getting a $25 billion valuation?
Because of the small nuclear reactors that they're going to be able to place near data centers. And everybody's going ooh gaga over that, but it's a zero revenue company, and they're not going to generate revenue for years if it's even possible. Yet companies that are actually doing nuclear, that have a track record, aren't catching a bid. There's something wrong there. So no, I really don't care. Like, I am in companies that are making me money, and I sleep very well at night, and I don't have to watch them all the time.
Tanner, your thoughts on handling FOMO, if you have any?
Yeah,
sorry. I don't have FOMO. I only have FOMO if it's a name that I've researched and I was thinking about going into, and then it pops before I buy, or I don't buy enough. Then I'm like, oh, you know what? I should have trusted myself. But if it's a name that I'm not researching that just goes up 80%, I don't care at all. I might as well have gone to a casino and put my money on black or something. So I don't care. That being said, in this, people are talking about bubbles and everything. I do think that there's a lot of companies that are more ideas than actual businesses. And people are so excited about the future that they're pulling so much forward, and they're ignoring the companies like NVIDIA. And I'm saying that with it being a $4.6, $4.7 trillion business, they're ignoring it. But those are the companies literally making money today off of still in a very excitable future. And if there is any cracks in the market, there is any doubts or worries, the companies that are ideas are going to go to nothing. And the companies that are making real money will have small corrections. Okay. So I think the risk reward is still heavily favored for me playing the real companies. But the reward is there, but my risk is so heavily compressed. And I, just feel very safe in these massive names that are still the largest beneficiaries of artificial intelligence, robotics, cloud computing. They've just dominated.
What about the data center names? You're into the entire AI ecosystem. Iran, Cypher, Wolf, all of those exploding every day. Do you feel FOMO around those, or you'd rather feel fine in NVIDIA instead?
Yeah, I feel fine in NVIDIA, Amazon, Google, all massive cloud names that have, lots of compute and the need for the compute themselves, right? So, I don't care. I benefit from NVIDIA. And that's also why I want TSM. I care less about picking the winners and more just the customers that are going to win across the board.
Roy, same question. How are you navigating FOMO?
Yeah, so kind of a combination of what these guys said. One is I invest in what I know. Quantum is an area I don't know, and I think there's very few people that know that. As far as on a deep level, what quantum actually does, problem actually solves, the probability it actually works, and what disruption looks like in that environment. How do we know this? Well, just look, a quarter or two ago when massive hyperscalers such as Mark Zuckerberg were being asked about this. Also, what Jensen Huang has said as well. Zuck said something like he doesn't really understand it. He's a genius. He is. I don't particularly like him, but I'd call it as I see it. And if he's saying like, hey, I know very little about this space, that should give everybody just a little bit of a pause. There's a lot of so-called experts out there. There are some experts, but I tend towards probably agreeing with Martin Shkreli that there's more smoke than actual fire here by a lot. It might not be real as far as the actual use case. We'll have to see, as it develops out. But I would rather to just concentrate my portfolio heavily in areas that I actually know and understand. I wouldn't be comfortable holding, other than just a swing trade, something that's in that space. Now, if it is a space that I'm interested in, what I've done is I've adopted, since we're in a bull market, Druckenmiller strategy of invest and investigate. So I'll do, a little bit of research, but I'm not going to wait and make sure that I do 100+ hours of research in this one play before I actually buy. I'll do my initial buy, and as conviction rises, while I investigate, then I'll add. Or if it's the opposite, and I've done this actually several times this year, where I'm starting to build out a position, and I'm like, no, I don't want to be in this, or I don't actually see the thesis, and then I'll actually get out. And thankfully, in a bull market, usually you make money still, but yeah, so I avoid FOMO just by concentrating, investing in what I know, sticking to my strategy instead of chasing. And I do have a small swing position that allows me to chase some of these plays if I see that there's an opportunity over the very short term.
Can I ask you guys a question? Out of all the Bitcoin miner turned data center plays, do you think they're all going to survive?
Jason?
Dude, I don't know how real that is. To be fair, I know that there's a lot of demand in the data center stuff, but I mean, if it really, really is just literally leasing out the power infrastructure, and we're talking about all these companies depreciating the ASICs, because those are not useful here. Those are going into the garbage. Like, and they're not, I mean, so that's depreciating that off the books. And then they're gonna maybe lease this space to somebody who wants it. I think it's very dependent on, one, if someone likes them enough to trust them, to sign a contract with them, to basically like, what do you call that? When you rent out some place that you're already renting, like a sublet their data center. Like, okay, just because you have power and because you have the power infrastructure that's there. I don't know enough on that piece to say that they do. IREN, I think, was the first, and I totally missed the boat on this because I didn't really understand it. Because when I thought about it, my initial thought was like, how does that make sense? It doesn't make sense because my initial thought was like, this is an ASIC. An ASIC is not useful for AI. Like, any way that I slice this does not compute. So I thought it was just like, I don't know. It didn't make sense to me.
But what if there is so much demand that all these players are going to win because there's literally just not enough compute facilities? And like whatever they have is going to be useful.
I mean, I guess that's the question, is like, is that really that in itself is the question. Is it really the fact that the physical real estate footprint for the power and the power footprint, like, is just such a scarce commodity?
That's how their stocks are trading. That's
how their stocks are trading. But I guess that's the question. I don't know enough to give a straight answer on that. Like, but it's a lifeline. That's for sure. It's definitely a lifeline because they weren't doing whatever it was that they were doing. So that was not working out. So it's at least a lifeline.
Bitcoin mining was not working.
No.
So.
And then they're still gonna dilute. They're still the same people at the end of the day. So I don't know.
Private jets.
That's just my 2 cents. I don't know. I don't know. I'm not really looking at the chat. Maybe I should, because I don't know where you guys are on this. But that's my.
No, a lot of people have made a lot of money off those names, and I think a lot of people are trying to figure out: do I hold or do I jump in? And I mean, holding is one thing, but jumping in, it's a little tough at these levels unless you think there's just an explosive room for upside because demand is that high. And even the Galaxy CEO, he was on my show last week, and he was just like, it might be a bubble. He was literally telling everyone, hey, like, yeah, we're getting a lot of money, but it might not be, it's like, you really have to see the management execution over the next 5 years on this stuff.
Yeah, that's mad respect right there when you can call your own business and say, well, we might be benefiting from a bubble right now.
Yeah, agreed.
I think Rigetti just said something along the lines, no?
Dude, Rigetti exploded today. This is like 25% up on, I mean.
Did you say expectations were getting a little too excitable or something?
Yeah. I mean, it's up 6,000% in a year, dude. This is like VCs chase thousands of companies to find the one thing that will go up 6,000% over 10 years. Rigetti is up 6,000, more than 6,000%, and you could have bought it for under $1 last year.
Congrats to shareholders. I'm so glad I'm not short on that.
Yeah, I agree.
Yeah, I'm just, you know what? We're all betting on the quantum internet stack. And what are you laughing at? And it's going to be great.
All I know is I'm about to get a 2 for here on the games tonight.
Steve, why don't you bet on sports as much as Jason?
Who are you talking about? You talking to me?
No, why doesn't White
Not
Steve bet as much as Asian Steve? I don't get it. Like,
I thought White Steve was in the sports arena.
No, he bets on like the Yankees or something, but he doesn't bet on.
Baseball is the hardest sport to bet on. I might as well. I do better on tennis, dude. I might do better with table tennis.
Dude, run lines are freaking awesome.
All right, so I
Someone
think
said, which one's Asian Steve?
Well, it's not the White Steve. So there's the White Steve and the not White Steve, which is the Asian Steve. So I'll claim it right here.
The one that's called Jason.
Yeah.
Oh, last thing, we always got to talk about this thing. All of us are buying.
Oh,
more.
Evans.
All of
Yeah.
us.
Yep.
Yeah.
Buying a lot. A little too heavy in this name, but I'm a believer in Ethereum.
Yeah. I mean, like if you're bullish on Ethereum, you're bullish on Bitcoin, with one short exception. So
I saw you post that.
Who just did that?
that was me.
Roy did it.
Yeah, it was sloppy, quick, but I was like, it had to be done.
It's a good one. This is a good one. It's a good show. It's a classic show. It's a great show. So. All right.
I just BM&R. I have enough crypto, but it was one for me that I looked at and I'm like, if I was gonna put, I think BM&R has a plus, like an extra check, because for someone who might have owned even a lot of extra crypto coming into this already from maybe the ultra lows around 100, it has never made sense for me to even think about adding until an X factor like a Tom Lee. Literally never even thought about thinking about really adding, to be completely honest. But that's the only that was the only reason like I even considered it, and because of that I'm like, you know what, it's an extra leverage, so it'll possibly make sense.
All right. Think that is it for us. Steve, both of you, Steves, thank you for joining.
Thank
We
you,
appreciate
Steve.
it.
Hasta mañana, maybe.
Yes, we'll do Technical Tuesday tomorrow with Jason. We do have bank earnings tomorrow, so I think all of us will be watching out for what we've got with the banks to start off.
Who is tomorrow? Is it ASML's Wednesday morning? This is the first semi to go. ASML, who's actually not done good lately. The last couple of quarters has not been. They had a huge rebound. What do you guys think about ASML?
I mean, I think the stock is telling us that it's ready to do well, but I guess we're gonna have to see what numbers they put up.
Yeah.
But we have JP Morgan and BlackRock tomorrow. Those are the big ones.
Yeah.
So that's what we're gonna see. Steve's Twitter, I put that in the chat. Jason's Twitter, I put that in the chat as well. We'll be live tomorrow. We'll get through Technical Tuesday. We'll be back next week.
Cheers.
And yeah. I mean, in the next week, we'll have a lot of earnings. And so that'll help us kind of figure out what we have for tech earnings. Steve just put out this big post on the AI bubble not existing. So you guys can read that on his Twitter as well. And we'll keep covering it over the next week.
This was fun. Appreciate the invite.
I love it. Thank you, everybody. Appreciate it. We will see you guys next Monday.
Thanks, guys.
Good night.
Milk and cookies. Adios.
Milk and cookies.
Bye, everybody.
Like a white Russian.